Welcome back, and for our next fireside chat, we're going to be discussing how can philanthropic capital catalyse exponential growth in climate finance. And here to discuss that with me are two absolutely fabulous women who are not just thought leaders but in this space, but are action leaders. And so I'm really looking forward to this conversation with you both. I'm here with Kelly Clark, Director of Finance and Capital Market Transformation at the Laudes Foundation, and Meryam, who is not only the Head of Sustainability and Responsible Investment Strategy at Legal and General Investment Management, she is also a member of the UN Champions Team for COP26, and wears some other hats too, I think, Meryam, but we may get onto that. I wanted to start by this past weekend in the run-up to COP. Kelly, you brought together some fantastic practitioners from across the financial world. It was a pretty intense few days discussing, how philanthropic capital can help accelerate climate finance. Do you mind sharing with us what some of the key takeaways were from those discussions?
Oh, absolutely. Thank you, Rhian-Mari. I think one of the things that we knew coming into the Glen retreat, but also into COP, is that there's been an amazing flurry of commitments to net zero. But the day that COP is over, it's time for us to focus on implementation. And implementation is complicated, and it is not yet clear to many of the institutions how they're going to get there. So the weekend was all about really understanding what the systemic challenges are and how we as a community can move beyond them. That's bringing the science together, clarifying the standards, ensuring accountability, and much of that accountability will be set by the inside, but then there's civil society agents that need to ensure that we're really focusing on improving disclosure standards, the way in which CapEx is being spent, et cetera. And I think another really important understanding and commitment that came out of the weekend is COP is important, and we need to be focusing on every COP now in terms of our action and our net zero commitments, but we also need to extend to G7, G20, global, national, and subnational milestones where we're able to review, to ratchet, and to move forward with integrity and ambition.
That's fantastic. And I think we just heard Steve Waygood say quite a similar point, which was this, the G7 and the G20, they do give direction and regulatory direction to the markets. So what can be born at COP can be regulated through different pathways. And you're absolutely right. We need to have the same focus on COP27 next year as we've had on COP26 this year, which I must say has been phenomenal. And the media coverage and the level of seniority and the level of financial institutions that are turning up here this year it's really, really heartening. But I completely agree with you. Hard work starts here. Lots of great commitments, but we need to turn them into action. And Meryam, you led a number of the sessions over the weekend with this group of financiers, very much focusing on the data, which I know you're very passionate about, but some of your reflections and some of your key takeaways too.
Yeah, so I have been in the investment universe, if you like, looking at climate change for a number of years, and obviously we're looking at a situation that's completely different from 3 years ago, 5 years ago, or 11 years ago when I really started. And so everybody's talking about net zero. We're not arguing about that. It's about the how, which is great. But there are serious challenges, and we need to face that head on. We can't just brush it aside. The interpretation of fiduciary duty is something that we really battled and kind of fought on in the UK and Europe, and sort of won, if you like, to sort of say that climate change is very much a financial issue. It's not quite the case in the US yet. It still is not the case in many markets. So we've got to kind of address that. We have a lot of data. The quantity is not the problem. But do we have the kind of data that allows us to actually create, products that actually invest into the solutions we need? We just talked about green financing, greenwashing, And that's partly to do with the fact that not because we want to greenwash, but sometimes we just don't know exactly what the companies are doing. We don't know exactly how the supply chains are impacting the parent entities. So we do need to tackle that head on. And the other part, what we talked about, where you were very much leading the conversation as well, is that we need to finance the new stuff. Not everything looks the same, right? So sometimes you can say, well, here's a utility company. Some of the exposure is coal, some of the exposure is gas, and some of the exposure is renewables. How do we make sure we shift into that? That's fine. But what if it's about a completely different decentralized energy system in Indonesia? Oh no, that's not where we invest, right? So being able to invest in new type of assets, in new different kind of markets where the risk return profiles are completely different, well, we need to address that head on, because what we're saying with big research coming out tomorrow from Race to Zero as well is the number of investments that we need to make for net zero to make that a possibility. We're talking about trillions of dollars. We're expecting that money to come from private finance. Well, they can't just move money from one pot to another. It doesn't work that way. So I think it's about recognizing that there's a huge amount of progress in the financial institutions, whether it be investors, bankers, or insurers. But actually, we need to work together with the governments, together with philanthropy, to tackle those stumbling blocks and making sure that we can start to really put the money towards the solutions that we need.
I fully agree with everything you've said, and your point about, well, if I may paraphrase, better data on fewer things, right? Make it really action and decision oriented. And to your other point about some of the de-risking we had earlier, the managing director, Maktar Diop of the IFC, so part of the World Bank, and he was making the point about needing to provide first loss guarantees, needing to provide some of that credit enhancement. And I genuinely think we need to be working with Maktar, with other organizations such as his, to figure out, now that we have this wall of capital that have signed up to GFANZ, I think we're going to hear tomorrow exactly the total, but it's looking really good. That finance needs to get unlocked, and there's a role for philanthropy, there's a role for the development banks, and there's a role for public capital.
Yeah.
Gosh, we're a very optimistic bunch today, which is great. We're going into Finance Day tomorrow, expecting more announcements. We need to keep up this momentum. But some things are working really well already, Kelly, and I was just wanted to come to you about, where is philanthropic capital currently already having an impact? What do you see it doing well? And we obviously need to dial that up. What else could it be doing?
Absolutely. I think one of the things that philanthropy does well and has a huge amount of potential to do even better is to bring what might be perceived as unlikely allies or unlikely groups to the table. So much of what needs to be done is about deep, deep collaboration with people that don't necessarily know each other's language. And so I think being a convener and being a holder of space for very important conversations is something that philanthropy does well. I think another thing that philanthropy can and must do, particularly now that we're seeing the quantum of philanthropic capital go up significantly, which we have seen in the last couple of years. That said, philanthropy, particularly philanthropy focused on climate, is still relatively small. So if any of our viewers are thinking about entering the philanthropic space, now's the time. But I would say that philanthropic capital is risk capital. It's almost always 100% loss capital. This is not capital that's looking to make a financial return. So really looking at how philanthropy can come in and strategically unlock the capital stack, particularly where, as Meryam said, there's a perception of risk, whether it be in emerging markets or new technologies. There's really an amazing amount of capacity around what can be structured using philanthropic capital. I think the other thing that is imperative and very exciting is, here, COP26, we're looking at the need and a desire for a new kind of multilateralism or diplomacy. And I think that is really an opportunity to bring voters, civil society, youth activists, philanthropists, governments, financial sector to the table to provide solutions in a different way. And then the last thing, which I think is critical, is in some of the areas that we all are working, particularly around climate policy and structuring capacity, the markets that we need to unlock do not have as much capacity as we need. And so I think philanthropy can help create that capacity and help create the interactions between finance, policy, consumers that really help to speed up, galvanize, and create scale. So just one more thing. In creating the Glenn Roadmap, which is going to be the invitation to set the path for what came out of this past weekend, we're really looking at bringing these types of commitments to the market and hear from our colleagues how to advance that.
That's fantastic, and deep collaboration. We heard from Christiana the radical collaboration, and I'm pushing that term because I just think, we've all been talking about collaboration, but it does need to go up a gear, right? And now, as you say, now is the time for us to really seize that opportunity and do that even more so. Speaking of convening, bringing people together, Race to Zero, obviously, so many non-state actors signing up to net zero. It's been very successful. You've been obviously key to that as well, Meryam. So just your reflections on that and some of the, how do we take that forward? How do we make sure that those commitments are actually going to turn into short-term targets and action and with the same urgency that Kelly's describing?
Yeah, absolutely. So it's been a phenomenally successful campaign, and I love the term Race to Zero because it's not being too prescriptive about exactly what each institution has to do, but it's a race with each other to get there. But at the same time, it's a race in that the rules are the same. You have to adhere to the same standards of ambitions, whether it be long-term or short-term, and also reporting requirements. So you need to keep coming back every year and say what you've done. So I think it's got that mechanism to hold institutions accountable once they're committed to net zero. So that's great. It also has been very successful because so many institutions came to us and said, we want to be saying net zero. What does it take? And so instead of, in a way, every institution defining their own net zero, which really wasn't helping sort of a year ago, to sort of say, actually, this is what we think banks need to do. This is what it takes for the underwriting part of insurers. This is what it takes for stock exchanges. So we're able to really develop and push them, if you like, the boundaries of how far they want to go as businesses, knowing that there's a sort of commercial sensitivity around that and competition sensitivity around that. And so I helped to kind of really establish the framework and launch the asset manager framework and banking framework, and then the service provider, which spans across from auditors to rating agencies to research providers and investment consultants. And, investment consultant, it's so meta, if you like. They are just advising. What responsibility do you have when you're a service provider and just advising? Well, we said, you have a huge responsibility, and we think that the net zero should not be an option. If you have a lot of assets to manage as a fiduciary and you come to your consultant, really the first advice you should get from them is, what does it take to be aligned to net zero? And so really flipping the kind of responsibility of sort of saying to asset owners deciding what they should do, and sort of say, actually, advisors saying, this is a net zero options, would you like to opt out? I think that can be a really pivotal shift in the relationship between asset owner and asset managers. And we're trying to see all those kind of connecting dots in the ecosystem of finance to make sure that the capital is flowing aligned to net zero, and this race allowed us to do that. Now, we're pretty much just at the starting point of this race, and the race starts now, because the how is incredibly difficult. So we have to develop their methodologies. And this is where it should be absolutely practitioners-led, but at the same time, philanthropic capital and governments are so important, because those methodologies and standards need to start to get embedded into the regulations. Also, there are a lot of things for which those commercial entities cannot really invest in or really speak for science. So philanthropic capital can then come in and sort of say, well, what does science-based aligned methodologies look like? So, the likes of, Science-Based Targets Initiative, there's a PCAF, there's, PI, there's so many methodologies developing now. A lot of them are currently philanthropically funded, and it should be so. but the end goal is to make sure they're being really used meaningfully by those institutions, and the governments start to use that framework to hold the institutions accountable. So it's not just a badge that you get. There's a real action point that comes out of this.
There's so much to unpack there. I wanted to pick on the point of the investment advisors. I wanted to touch on the starting gun. I want to touch on the science-based alignment, and then that final point you made about accountability. Because the investment advisors point is such an interesting one, but I think it touched on something you said, Kelly, as well, which is the need for education, capacity building right throughout the system. And again, the opportunity for philanthropy perhaps to take the role, and how are we going to upskill people so quickly and on what is quite a complex topic, and which they then need to align with deep financial expertise as well. This is a complex challenge, I think.
I think it's a very complex challenge. I think it's absolutely part of the plan. There's a new entity that will be set up in part, 100% actually, supported by philanthropy, that will really work on this education piece, right. The integrity of the science, working with all of the different players in the financial value chain to make sure that that knowledge and that ability to match capital flows with science is really shared. And then, of course, the policy piece is also critical. And at the end of the day, the sooner we can get towards mandatory disclosure and regulation around these climate topics, the better. And of course, philanthropy has a role, because a lot of that work, especially at the early stages, is funded by philanthropists.
And I was just going to say, Meryam's point about the starting gun, I think, is particularly pertinent. Maybe not everyone appreciates that COP26, these 2 weeks, this is the beginning of the UK's presidency of the COP. So this is actually the starting gun for the next year. And we've already seen just so much action being galvanized by the fact that this is happening in Glasgow for these 2 weeks. And so, 2022, if any of us thought we were going to have a rest, some bad news for everybody out there. But and this point about accountability, and I don't want to gloss over what you said there, Kelly, earlier about accountability to the young people. I think that is such an important point, and that we keep our promises to the young people. We're expecting them to take to the streets over the next couple of weeks. They're angry, they're upset. They need to hold us to account on our promises. And I just think accountability is a word that we're going to hear more and more as these commitments need to turn into genuine action. And we need to make sure that maybe the philanthropist community is also holding us accountable and making sure that we're doing what we're saying we're going to do. And I think, anyway, I've made the point on that one, so instead I will, we're all in agreement, violent agreement on that one.
I think there was also a conversation over the weekend about the fact that, there are so many scary facts about climate change. Mm. And also when you see everybody talking about net zero coming into 10, it just feels like, what's going on? And that's fair. I think that's the right conversation to have. But I want us to talk about the opportunities, right? Yes. That we can get to the future that we want. There is money there. We just need to figure out how, so we can actually really open up that dialogue with them about the kind of future that they want to see, and making sure that we are helping them to get there. And I think that comes back to the point about collaboration. It's not keep talking to each other where we are already converted to the kind of religion of climate finance. We need to think about the intergenerational conversation, but also between different parts of the world. Again, a lot of those conversations are mainly happening in sort of London, Europe, and also maybe New York and places like that, and bubbling up in Asia. We're not talking about that in South Africa. We're not talking about that meaningfully, let's say, at that scale that we need in Brazil, in India. So it's just making sure that not only that it's kind of addressing the financial centers, but who we're going to impact, which is the people on the ground globally.
I'd like to come in on that if I could. I mean, the accountability to the next generation to youth activists is critical. And it's also critical that we're looking in the same way with the same opportunities in emerging markets with indigenous people. And there's a huge amount of opportunity. Being able to really set up smart public-private partnerships with philanthropic capital and the incredible structuring capacity and deal flow that we know is in many cases shovel ready in these markets. I mean, I'm telling you, of course, Rhian, this is your daily bread and butter. But I feel like we're really at a moment in time where the need is being understood and the opportunity is absolutely tangible.
Well, thank you for referencing that, because that is what we do at the Green Finance Institute, and we're working hard at the moment at devising a credit enhancement guarantee fund that will do something that both of you have touched on, which is, use concessionary finance. You okay? Using concessionary finance, both government finance, philanthropic capital, if possible, to provide that credit enhancement facility that will then crowd in the private capital. Is something I feel very passionate about, because we need to seize that moment. But I guess one question is, we haven't seen philanthropic capital be used very much in that way to date. What are the barriers to that? Are there structural barriers within the way philanthropic funds are set up that makes that challenging?
So I think that's a multifaceted question. In some jurisdictions, excuse me, there are restrictions to the way in which philanthropic capital can be used. But I also think that one of the bigger excuse me, obstacles is that there hasn't been a great deal of understanding within philanthropy of financial structuring and the ways in which these opportunities can be highlighted and brought to bear. And I think that is really, really changing. And I think that it's so important to come back to the fact that philanthropic capital is 100% loss capital. People are not expecting to have a financial return. So if you think about that within the context of a capital stack, the ways in which that can provide guarantees, that can credit enhance, is phenomenal. And so matching up that capacity with some of the structures is a real opportunity. And I think that we've been ignited after the weekend, particularly about how we can do that. And there'll be a great deal of work in the next few months on that.
Great.
Can I just add on to that?
Of course.
We also had a conversation about the role of MDBs and development agencies in general. Like, in theory, they should be taking that risk capital and crowding in the private finance, and it does happen in some cases. So we had a really good conversation about where does philanthropy come in, but also do we spend the effort reforming, if you like, the premise of development agencies, perhaps as a shareholders in them as governments, or even the as we buy their bonds as institutional institutions. And so I think there is a kind of what I took away from it, we have to do both, because we can't wait for the perfect system in place, but we also have to think about reforming what's already there, who's meant to be taking that risk, and just making sure that we kind of hold them accountable on that point as governments, as taxpayers, as the buyer of those bonds and things like that. So I think there is a really kind of multi-layered approach, and I think philanthropy can help address that head on, because we just cannot wait. We have to move absolutely trillions every year, otherwise we have no chance of meeting net zero.
And I had the opportunity to speak earlier, and I used that to call for a mindset shift. Mindset shift in the way we deploy government capital, mindset shift in the way that we deploy the $11.5 trillion of balance sheet that sit in development banks and multilateral organizations, because we have crossed the Rubicon, and we now have these private finance, mainstream finance organizations who have committed to net zero and who are going to need to find new risk-adjusted returns and investment and lending opportunities. So there's a huge opportunity to de-risk and unlock that capital, which sadly, as you said earlier, it's not going to happen by osmosis. It's going to need some real collaboration and real structuring to think about it. And as we're speaking here, I'm realizing, you're a former capital markets banker. I am too. Both of us have changed direction. Meryam, you're working both in the UN team and also still at LGIM. And I guess if there's a call to action to any listeners or viewers, it's if you're working in the financial sector and you want to get more involved in this than you're already doing, there are loads of opportunities where we desperately need your structuring capabilities. You're talking about how we make the capital stack work, how we structure guarantees, how we get money moving into the emerging markets. And now is the time. This is the challenge of the next 10 years. And I know I'm getting very excited because it's COP week and we're having so many fantastic conversations about people who are really focused on making it happen.
Yeah, well, it makes sense from a net zero and climate perspective, but really it makes commercial sense. And we need absolutely everybody. This isn't somebody who's hugging trees somewhere. It's just
we need them too, but still.
Yeah. It feels nice. But I think to your point, we need structures. We need actuaries. We need people who can create products. We need people who can really engage with different kind of asset owners who are struggling to embrace this. We need absolutely everybody in the financial system, as well as corporates, obviously, who are doing the work on the ground in the real economy. Please come and kind of work with us in philanthropy, because we need to hear from you in terms of what needs solving. Mm-hmm. There is money there also on the philanthropic side. Absolutely. And so I think we just need to make sure we collaborate for the same goal.
If I may, I think also what you're hearing, what we're talking about is leadership. And I think that one of the things that has been so clear to me in the run-up to COP is we need all of the leadership that we have, but we also need new leaders, people who see and feel an absolute mandate to be part of the solution. And we don't need to know all the answers, but we need to be willing to find them together. And that takes leadership.
That's a fantastic note to end this conversation on. Thank you, Meryam. Thank you, Kelly. Keep doing the fantastic work that you're doing, and have a great 2 weeks here in Glasgow.
Thank you.